Alright folks, longer video today. Going to talk about some trades, answer some questions, and go over some other things. So please stay with me as we jump around all over the place. First things first, trading plans now available for download on the forums there. I'll paste a link in the description down below. The deal was that if it got 100 likes and 0 dislikes, so 179 likes, good job smashing that button. And this used to be up to 3 dislikes. Those people changed their mind. Not sure what their deal is, but this one person who has not changed their mind, I think they're just unaware that you can download a free PDF reader. So here's the PDF trading plan, and I hope you guys enjoy that. Next, we're going to answer some questions, right? So Dre Day, Dr. Dre, off topic, but what microphone are you using? Surprisingly, I'm actually just using the headset that came with my phone. BlackBerry, yes, I'm still using BlackBerry. The company's still around. So I have a box of these, probably 5 to 10 of these. They just last forever. Sound quality's good, sounds great. Why spend money when you don't have to? So there's that. Next is about hotkeys. Every video I seem to have to answer questions about this. So I do have a hotkey that will get me into trades to risk 1%. And I also have a hotkey that will set a range order for 2 to 1. I think the best way to do this would be to run a workshop where we go over hotkeys, and specifically Kyle K29's hotkey. I know he's been trying to work on a video for this, so we can explain it to people who aren't too tech savvy, go over the spreadsheet, fill that out, etc., etc. But I'm going to reach out to Kyle and see if he wants to just attend the workshop. We can record the workshop, and that would just be awesome because we could, figure out solutions to people's issues live. People can ask questions live. We'll go over the spreadsheet one by one, fill in the form together. That would be super useful. So be on the lookout for that. Next, we'll talk about a comment Seth made on my 2R all or nothing approach. He says, I know you don't want to be greedy, but you can wait for bigger targets, move your stop up to 2R, do kind of like a trailing stop type of deal. And I believe that's what he does. That's great. Yeah, a lot of people have rules like that, right? Take off a bit after 1R and then move their stop up. Some people take a little bit after 2R and then move their stop up trailing, or some people just based on the price action. If there's no new 2-minute low or no new 5-minute low, they'll just have no reason to partial and just let it run. Those can come out as huge winners, 4 or 5 Rs. Personally, it comes down to you, right? What's your personality? As I said before, I got some things going on around the house here. I need to step away from the station at all times, or any time, sorry, and just 2R all or nothing is best for me. We'll see this in this WDC trade later. I wasn't even here when all this happened, but it depends on you guys. The trade management system that works best for you. That's basically what it boils down to. I'm not saying one way is better than the other. You can obviously aim for bigger targets. You can go for smaller targets. Just take a look at your journal and your numbers, what makes sense for you in terms of your accuracy and what you're coming out with. Right? And there was a comment about getting out at break even. A lot of people have this rule: if it goes a certain distance, comes back to break even, they just get out. Based on my experience, it works sometimes it doesn't, and it's frustrating. So here's an example, right? I took Roku on this 5-minute hammer. This is a 15-minute chart, you can't really see it, but I took it on the bounce here, and this was low of the day, and it tested that 2 times, hit some sort of level here, 1 to 1-ish, and then came back and I got out at break even. This is very recent. This is May 28th. And that was frustrating looking back, right? Because there was no entry to get back in. Sometimes when it's dumping on the way down and then it comes back up, the way it comes back up, you end up getting back in up here when your original entry was here. So the risk to reward's now messed up, right? If I got back in here, my stop would still have to be here, and my reward is here. That's messed up. It's now 1 to 1. So I'm not a fan of getting back in multiple times. It's just you never know. Just for me, I respect the original stop. Whatever happens in between that and my target, then so be it, right? That's the way it is. And this kind of comes back to a question Mickey had here. Mickey Collins says, do you only take the trade if both the risk and reward coincide with discernible points, moving averages, support resistance, VWAP, etc.? Or do you also trade if, let's say, the risk is defined? Okay, so basically, I'll look at a chart. I'll figure out where's my entry going to be. Entry. Where's my stop? Always a technical level, right? VWAP, low of the day, whatever the case, depends on the pattern, prior candles, prior bars, prior wicks. And then I'll look at the target. I'll say, okay, 2 to 1 is here, right? I have a spreadsheet that will actually calculate that quickly for me. Where's the 2 to 1? I look at that level, target, and I'll think, okay, what's in between? How many moving averages are in between there? Do I have to break high of the day to get there? Do I need to cross the VWAP to get there? And these are all levels I have to consider, right? Preferably, you want clear path. You don't want to deal with all this stuff. But other times, it's okay. If there's only 1 or 2 moving averages, depending on the time of the day, it'll cut through that, right? So WDC is actually a really good example of that today. It went through 2 moving averages to get to my 2 to 1. All right, so that's for Mickey. We also have one more question. I'll save that for last. It's kind of important. Let's take a look at the CRM trade from yesterday. This is one of the examples of why I didn't get out at break even, why I just didn't want to deal with that stuff. So CRM, it was basically trending down all day, very, very bearish, and I ended up taking it once once it made a higher low, right? A higher low is what I wanted to see, because oftentimes you try to take these reversals and what's happening, you're actually just inside of a triangle. Sometimes the new 15-minute high can be here, depending on how the candles are born, whatever. But if it can't breach the prior high, what do you see here? This is a descending wedge. You don't want to be involved with that, right? So I waited for those triangles. Like, these were kind of just triangles on the way down. Each time was with the flat bottom break, flat bottom break. I waited for the prior high to be breached and this high to be breached. And look what happened. Came back to my break even once, twice, three, I don't know, 4, 5, 6, 7, 8, 9. This is something I just don't want to deal with, getting in and out, in and out, in and out, right? I drew this trend line, right? If we are in fact reversing, this trend line should hold. I drew this with 2 points, right? After 2 points. What do you think happened as the candlesticks were being born and filling in the void, the gap here, right? They were respecting this trend line 3 times, 4 times. So as long as this trend line is being respected, and arguably this is the 50 moving average, why do I need to get in and out, in and out, in and out, right? That's just a headache. It's commissions and decisions. You missed the vote, this and that, regret, all this stuff. Just leave it. So I'm saying just leave it. This is what I did, guys. I just left it alone. Look at the 15-minute chart. This was a beautiful thing. It failed to make a new low. I love these. When it pierces down, then the next candle, it's called almost like an inside candle, if you've heard of that. Basically, the range is inside of the prior one, right? So closed here, opened here, and was just failed to make a new low. That's, pretty good sign. That's we could be finding a bottom. And that was that, right? I ended up getting out here in this area, which actually marked the high of the reversal for my 2 to 1, right? So no headache there. Today, I didn't trade the open today, guys. It was way too choppy for me. I did not like how SPY was just all over the place. I was trying to find discernible triangles to play off of, or some sort of shape, but it wasn't even a channel, honestly. It was just all over the place. All you need to do is pull up a 15-minute chart on SPY to see, or not even a 15-minute chart, any time frame, just all over the place, guys. I did not know what's going on. So with the market this volatile and the watch list was not that great to begin with, I didn't risk it. So you can see my trade log, I just sat it out, came back close to power hour. This is where I saw WDC. So WDC sold off with MU, right? Sold off with MU, and as you can see on the 5-minute chart, it just trended down all day. There was no support. And again, these are kind of these triangles on the way down, break, flush, break. But this is what I saw on the 15-minute chart. I love this setup here. Okay, so basically low of the day was here at the time, right? This red candle, let's just zoom in, make this bigger. Low of the day was here. What happened? It flushed, so open here, flushed, broke low of the day, and refused to go lower. People were buying at 36 whole number, right? So either that's shorts covering or bulls value buying, dip buying, knife catching, whatever you want to call it. Whatever the case, they're both buying, right? When you're short, when you cover, you have to buy to cover, right? So besides the point, this is one of those candles I was talking about, right? That gives you a glimpse of what's happening in terms of psychology. This candle was the underdog. It was full red, broke low of the day. You would expect a continuation, but no, the buying pressure sent it back up, right? This is a veteran, guys. This candle is a comeback kid. Veteran, broke the high, and had this huge top wick. So as soon as it broke this previous high after this huge comeback, I went long. Let's take a look at the 2-minute chart. What happened? Came back to my break even, right? Nearly stopped me out down here, 2 cents below low of the day. But what happened? The buyer stepped in again at this $36 number, right? I wasn't here in front of the screen, but this was obviously some sort of strong level that just kept getting bought up. That's what I'm saying. Just leave it alone. Leave it alone. If it stops me out, it stops me out. Then off you go. I don't care, right? Let's move on to the next trade. And basically was able to catch this nice little formation here. Just trended up on higher highs on the 2-minute chart. No one, basically anyone who was trying to play some sort of triangle or whatever, it had to stop out here, breach this here. They had to almost hit this high here, but I didn't see the selling pressure, right? So once we just trended off, I let it go 2 to 1. Right before the VWAP, ended up getting out right at the top of this trend, and then it kind of faded off into the close there. So pretty lucky there. Anyways, that's that. Let's answer the very last question. If we can't find it here, where's that? I'll have to cut to, oh, here it is. Okay, last question. Out of curiosity, how much is 2% for you? And I give a little smart ass comment back. It's roughly twice the amount I risk per trade, which is 1%, right? Haha. Well, what I'm trying to get to the point, guys, it doesn't matter what my size is or what anyone else's size is, right? We need to focus on our own accounts. If you can trade properly with $100 risk per trade, or even lower than that, say 10, 25, 50, whatever. If you can do it with $10, you can do it with $100. You can do it with $1,000, as long as you have some sort of system, right? You're doing something consistently, because the market doesn't know how many shares I took here. The market doesn't know how many shares I'm trying to get out here, right? The market doesn't care what you're doing. So if you're able to, that's why I'm saying trade in R's. That's what I'm doing, trading in R's. I don't care about these numbers. I will be able to scale up my size and continue doing the same thing without getting scared and rattled and all this stuff, right? So that's one of the reasons why I don't share my P&L. You know, a lot of people ask me that. How much do you make? How many shares? Well, it's irrelevant. What matters is the candlesticks, right? Because if you're trading relative to size, everything's proportional. Whether this was risking $100 or $1,000, the stop's still the same, right? Whether my target was getting me $500 or $1,000 or who knows, $50, doesn't matter. The target, this level is the same. The chart don't care, right? Chart don't lie. So anyways, long ramble. That's the recap for today. Thanks for watching. I hope everyone has a great day. Bye.